Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
In today's mortgage environment, providing our wholesale community with the best combination of product, pricing, technology, and service is paramount to their success. PRMG, built by originators for originators.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highways, created exclusively for Mortgage News Network and brought to you by our friends at PRMG, working for your best interest. Hey, welcome to 2019. Boy, 2018 went awfully quickly, didn't it? It seems like they just do. I hope that you've enjoyed a great holiday season with your families, and I wish you nothing but the best in 2019 and this year ahead. So looking back at the last week of 2018, boy, it was a volatile one. We told you that this volatility was going to be something to look out for, and it will continue. Why? Well, because you've got a lot of drainage of liquidity. When the Fed stopped repurchasing, when the ECB cut back on its purchases, and they will do so again beginning this month, you are in a position to see volatility increase because of less liquidity. It's that simple. Now, what does this mean as far as the marketplace? Well, you can see more swings like you saw last week in the stock market. And the stock market did make an important reversal. If this continues to the upside, we will see the bond market come under a bit of pressure, and that's one of the things we want to watch out for. Now, of course, this week we're going to get some important data on the jobs front, the important jobs report, which we get every month, and this can be really critical. If the jobs data shows continued strength in the job market and job growth, the stock market's going to like that, and you're going to see the bond market obviously take a little bit of punishment if the stock market continues higher. So we'll be watching that carefully. The other thing I want you to watch out for is the inflation component within the wages. Wages have been rising, so if they start to move up higher than expected, bonds will not like that. Now, of course, should wages back down, we will see the bond market probably hang in there pretty well if the job market shows that wages are not rising as high as feared. Last week was really interesting. I want to talk a little bit about some of the data we got specifically related to housing. And we did get some appreciation reports from FHFA and Case-Shiller. Now, this was for the months of October, I should say. And when we look at that data in October, it's important to remember that interest rates did start moving up quite a bit in the month of October. And a lot of people are very fearful about the housing market. And people are saying, oh, it looks like the housing market's in deep trouble. Well, the data kind of doesn't really corroborate that. Now, of course, there are certain markets that had a bit of a tough time. San Francisco did slow down. We saw slowdown in Seattle. We saw that some markets actually did well, like Phoenix did very well. New York did very well. But it was a mixed bag. It really was actually much more areas doing better than worse. And when you take a look at the overall numbers, according to Case-Shiller, we saw 0.1% rise in home prices during the month of October. And if you take a look at what FHFA says, they were up 0.3%. Now, both of these reports showing year over year about 5.5%, 5.5 on Case-Shiller, 5.7% on FHFA, year over year rise in appreciation. Certainly showing some resiliency and strength. I'm curious to see what we see in the coming months because, as we know, interest rates have improved and perhaps sentiment has improved. One of the big issues that's out there is the big decline we've seen in the stock market has hurt the psyche of buyers. When you see your assets diminishing, it gives you less confidence to go out and make a purchase of a home. So this is something that individuals we will be looking at as far as how individuals respond if the stock market starts to improve, and also how they respond to lower rates. It's my feeling that you will probably see some slowness in the housing market, although not terrible, over the winter months. But as the spring market comes around again, there's still pretty tight inventory. It's gotten a little bit looser, but it's still pretty tight. Demographics are favorable. Interest rates appear to still be favorable. The job market is still favorable. We see a pretty healthy housing market. You don't need home prices to go up 7 or 10%. 2, 3, 4% is really, really strong and can create enormous wealth. Do the math. And if you'd like us to help you with that and give you that real estate data and help you with what's going on in the marketplace every day, just subscribe to MBS Highway. I think it will change your mortgage career for the better. Hope you have a great day. Bye-bye.
PRMG continues to provide our wholesale partners across the nation with better technology, better product, better pricing, and better service. Our nationally recognized brand is more than just an image. It is a symbol of integrity. PRMG, built by originators for originators. Be sure to click on the link below for your free 30-day MVS highway trial.
This is Mortgage News Network.